So number 5 is about to prepare a statement of return earnings and the closing entries for the corporation. Statement of return earnings is going to show the change in the return earnings, okay? And this is required under accounting standard for private enterprises. So take a look at this example. The name of the company, the title of the document, statement of return earnings, for the year ended December 31st, 2024. So you have an opening balance for return earnings, and then you add the profit for the year. So the profit will increase return earnings, and then you are going to less dividend because dividend will decrease your return earnings. So your return earnings of December 31st is over $1 million, right? So if you compare January 1st, right? If you compare January 1st versus December 31st, you notice that that return earning balance has increased, right? Has increased. So why it's increased? Well, you make $225,000 money, right? This is the money, the profit you make, but you only gave the shareholders $57,500, right? So this would be 100. Let me see if this is correct, okay? So you make $225,000, but you only give shareholders $57,500. So whatever left is the increase in return earning. So your return earnings will increase by $167,500. And that is why the return earnings balance as of December 31st is higher than January 1st. Closing entries for the corporation, I mentioned this to you about this, right? On Thursday, we're saying we need to close revenue and expenses to income summary. And then we need close income summary and dividend to return earnings, right? So the entry for closing entries would be I debit my revenue and I credit my expenses. And I credit my income summary. So that's this part. Okay. So now let's deal with this part. This is what? This is A. This is B. Okay. This is. Oops. This is A. And now for B, you're going to debit income summary. And you are going to credit dividend. And you are going to credit returned earnings. Okay. So that's what we mean by closing entries. So it's my A and B, right? For A, I close the revenue to make revenue account to be 0, to make expenses account to be 0. The remaining balance goes to my income. And for B, I close my income and the dividend and to return earnings, So at the end of each period, you have to update your return earnings balance, right? Because in that year, you have income, you may have dividend, your return earning balance has changed. So to update return earning balance, A and B is the closing entries. that you need to do this. So any questions on this part?